Hello and welcome to another daily market update by Market Intel. Today we want to take a look at a cryptocurrency chart which is currently still in a correction but could be close to a turnaround. So let's take a look at the chart. It's render. Let's go. Okay, we're now on our website, dailymarketupdate.com. Here you can get access to all sorts of Elliott-Wave counts completely for free. All you need to do is to register on our website. You can do that. The link is in the description. You find the link there. As I said, it's free and a no-brainer. So let's take a look at the render chart today. We'll take a look here at the 1-day time frame. And as I promised, we have been in a correction. You know that we've been in a correction. It's been frustrating. And this correction, believe it or not, it started in March 2024. I mean, it has been an incredibly long correction. Frustrating, not only on the render chart, but some other cryptocurrencies have been in a correction for that long as well. The main question is now, are we in a bear market, or is this actually just the end of a correction and could we get another rally, for example, in a third wave? Well, you see on the chart that this is what we expect, right? This is our expectation that we are sort of in this third wave rally. And well, we haven't really started that. We haven't started that third wave yet, but we could be close to starting that third wave rally. And it's highlighted here in light blue. This third wave should be the strongest rally in that cycle. And you can see here where from down here, probably from this area in 181 to 543, this is where the bulls should ideally step in. If market sentiment is really, I mean, let's say if the interpretation of the market sentiment is actually correct. Because what do we do with our Elliott waves? Well, the Elliott wave counts, they are representations of market sentiment. And the Fibonacci levels that we're tracking, they are levels that tell us where market sentiment should change. So we are interpreting market sentiment in a mathematical way. So let's say if a price is in a correction, a so-called wave 2, then this wave 2 should lead to a third wave rally. But it needs to form a local low here in this region. It's about time. The support area goes down all the way to $1.81. Ideally, we avoid a break below $1.81 because this is really sort of, let's say, the maximum it should do. 88.7 Fibonacci retracement, ideally not below that. That's sort of the maximum a wave 2 should do. Any break below that will likely lead to invalidation. The invalidation point is here, the 27-cent level. That's the beginning of the blue wave 1 that started in 2022 already. And yeah, this is now a correction, really good reward to risk ratio. Can we promise that support will hold? No, of course not. Nobody wants to promise that, however, because markets will decide, right? We can only identify the areas where reward and risk are in a, let's say, favorable condition for a buyer. And this would be down here because we're very close to a invalidation point. We are very close to the $1.81 level where probabilities will shift. And a third wave could start from here, which is the most aggressive trend, really, or the most aggressive rally in a trend. Now, I would say the first step would be to get a break above the recent highs here from February, then a break out of the box to the upside. That would already indicate that the buyers are serious. And you can see that even this arrow that we've drawn here, that looks a little bit like a trend line. I mean, getting a break above a trend line could be an early signal, but really we need a break above that 1188 level, and then we can focus on $25, maybe even $35 plus. And you can see that the reward to risk ratio is really favorable. So you can make a lot of profit potentially and risk little. However, it's still important that you are happy, let's say, with the risk to the stop. Depending on where you set the stop loss, you could set a stop below the box or below the 27-cent level. Both actually would provide a really good reward to risk ratio. Now the problem is though that you still need to calculate the position size, and that is up to you. It depends on your own risk tolerance, risk profile, and so on. However, this is the area where the buyers could ideally step in and start that third wave. So it is an exciting time in the market because a lot of cryptocurrencies are now deep in support. So that is what we're tracking at the moment. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure that you register on the website. You can do that completely for free. Thank you very much. Bye-bye.